Okay,
All
so
right.
you were saying 100K Bitcoin life is good. Now, hold on. I'm sorry, guys. We're just jumping in this podcast with just right out of the gate. But I remember telling you, I was like, hey, and this was at like, I don't remember if it was like $50 a Bitcoin, $70, or I'm sorry, $50 or $70 a Solana. But I was like, if Bitcoin rips, Solana's going to rip. Solana is just good beta. Do you remember that?
I remember it absolutely. You had the call, and it was beautiful beta and also a lot of alpha, right? Because
Yeah.
there were times I think throughout last year where Bitcoin was getting sold, let's say, by the German government after a big seizure, or there were regulatory considerations, or there was pushback about some of the new ETPs, and Solana was still kind of doing its own thing, and at times going up when Bitcoin, or certainly Ether, was going down. I think. Solana was very smart beta with respect to Bitcoin. Solana was a lot of alpha versus Ether.
Yeah.
The L1 wars are slowly being decided, and maybe not so slowly for this year.
So, okay, we already have a ton to unpack. I feel like every time I talk to you, we get into this. But first, let's back up really quickly. For those of you who don't know, or the people who don't know, I should say, can you give a short and brief introduction into your long and storied history?
Wow, of course. Yeah, we'll put this one on the clock. Stopwatch. No, I'm Gordon Grant. I'm a derivatives trader. Formerly ran Genesis regulated derivatives business. Have traded life to date somewhere around $100 billion of cryptocurrency options. Spent most of the first 10 years of my career cutting my teeth trading emerging market foreign exchange, esoteric commodities, interest rate, credit derivatives, and equity index volatility before stumbling into Bitcoin, and dedicating the rest of my life to this at times very challenging space. So got connected with you and your prior locale of employment, and been rapping about coffee, global travel, crypto, decentralized finance, and geopolitics since then. So really great to be back on with you.
Really all the interesting things in life, honestly.
What else
right?
does one need?
I mean, what else is there to talk about? Yeah, we don't ask for much. Exactly. Global travel, economics, crypto. I mean, it really doesn't get any better than
it's
that.
all here, and it's all happening. That's the other thing, which wasn't true when you made that call about Solana was a double digit handle for sure, 50 or 75. It wasn't still all happening, right? No. I mean, even LSDs on Sol like Jito were just coming into existence and getting traction. Some of the Sol meme coins were taking off a bit, but I think that was really after like Bonk had done that 10x and then come off, and Pepe was still, that was like 3 or 4 zeros ago in Pepe, and people were wondering if we were actually back. So now, right, it's the end of Jan 2025. I think we can definitively say we are back, and it is all
we are back with a vengeance, and it has been glorious watching this beauty run. But I honestly didn't prepare for this podcast because I know I can just ask you a question and you can just run with it. But I'm curious to get your take, since you brought up meme coins, on the Trump meme coin. What do you think? Good or bad? Was it interesting to you? Did you trade it?
I have not traded it, been paying attention to, obviously, to the derivatives on some of the centralized exchanges. As and for the viewership, I focus on institutional, crypto derivatives portfolio management. So that's not that Trump coin is not institutional. It's just that there don't yet exist derivatives that would allow for institutional portfolio management.
It's not institutional.
It's not. Okay, good. You said
it's not institutional.
Right. It's a meme coin. But it may get there. I think memes are institutional now, but Trump coin may or may not be. My view on it is, if you had asked what was in the distribution of outcomes for the 47th presidential administration, and we expected to see a lot of policy initiatives, some of which we're getting, some of which are specific to crypto, but I think generally speaking more related to commerce and international trade. On the night of the crypto ball in Washington, D.C., I don't think people were putting that out there, even as like, fifth standard deviation on that distribution. I think it's irreverent. I think it's bold. I think it's potentially caustic. And I use that word with a great degree of precision. Caustic, in a chemical sense, means a material that eats through other things around it. But it can also be very volatile and combustible, right? So when it combines with other chemicals, it can really catalyze other kinds of things. So when you talk about caustic, right, you're talking about stuff like, I don't know, sulfuric acid. And you would go, well, sulfuric acid, good or bad? It's both, right? You can't refine high-grade petrochemicals without sulfuric acid. But if you put it in the wrong kind of vat, it'll just burn everything up and might actually blow up. So I think it has the combination to be both. It asks some really challenging questions, right? Which is like, where does value derive from in this asset class other than proof of work consensus and utility from DApps? And I think people have said, well, Trump coin was okay. And what about Melania coin? Or what about any other nth iteration of this theme? And then people get into ethical discussions, which really is beyond the ken of, is this good? Does it work for the crypto ecosystem? I would say if you measure it based on wallet activity of people who were buying it that haven't previously been active crypto users, probably salubrious, and then it gets interest in the ecosystem. I think the blowback from a lot of established players, kind of poo-pooing it is not so great, because I think it distracts from things we all want to be focused on, which is the 47th presidential administration appears to be quite regulatorily friendly. There's more institutional money than ever coming in. Things like the IBIT ETF was the leading or the number 2 ETF for inflows in the first couple of weeks of the year, right behind VU. And even more recently, right, notwithstanding this deep seek, kind of sell-off in tech, Bitcoin's still here at 102K, right? We are managing to continue living that 100,000 Bitcoin life. So all in, I don't a priori take it as a negative. I think much like this, the caustic metaphor, you have to be careful with what you do with it, and kind of see what other kinds of activity it can catalyze, or does it just prove to be destructive in terms of capital flowing in and out of the space, but not really creating anything of additional value.
Yeah, exactly. I have actually 2 questions kind of along that same vein. I don't know which one I want to go with first, but let's go with value creation that you just.
Door number 2. Which one?
Door number 2, value creation. Actually, door number 2 was value creation. So this is a conversation I've had with a few other people recently. How do I word this? Will we ever see anything built of real value in crypto, or is meme coins kind of the end game here, or is it, I guess, a global casino the end game? What are your thoughts on that?
Yeah, financial instruments that offer uncorrelated returns are utility in and of themselves. That's a hypothesis, maybe even a postulate, maybe even an axiom. But let's throw that out there, and you can say we either debate it or we accept it. But if we accept it, or we're willing to debate it, then we're already getting to utility for assets which are considered purely speculative, i.e. these are kind of casino grade, parlor trick instruments, which don't really bring much to this world, other than, depending on how you hold them and if you hold them and what you blend them with, they can be very powerful portfolio diversification tools, in much the same way is true for meme stocks, right? And that's, I think that's often overlooked, right? When people go, well, the coin with the dog and the hat and the baby hippo and whatever else in its iconography, is driving price action, or the frog, not to leave out Pepe, and this is a terrible thing, and we should be focused on building. It is in and of itself a form of construction of financial engagement. So there's that one. Now, will we go beyond that, right? Will we go beyond this casinification? Probably, but the question is, what are we going to build on it, right? In the last 24 hours, there was an announcement from, I think, the London Bullion Market Association that gold is now going on chain from, kind of mine to bar. Fascinating, right? And so it is being built. Now, people will go, but this is tragic because there's nothing I can bet on here, right? What am I, what's this going to run on? Some enterprise grade, semi-permission blockchain. There's nothing for anyone to bet on. So they kind of go, they digest the news and go, raw blockchainification of something that is kind of an old, clunky and prospectively dirty business. But the attention goes back to what's investable. So I think that, the question is, how do you create utility, make it investable for people, and continue to garner their attention? And I think in order to do what everyone hopes, which is innovate, right, create stuff that generates value and allows it to be captured and have it be relevant, you got to keep people's attention. And if nothing else, the naysayers will poo-poo the Trump coin or other meme coins. And we could even argue, is the Trump coin a meme coin, or is it something else? Right. I had a fascinating conversation yesterday with some Solana ecosystem builders, and they're doing some sports related stuff in the Solana ecosystem, with the new token and tokens that run on that platform that sort of accrete value from athletes' activities. Is it speculative, right? Having a token that's that's called sports coin or athlete coin or whatever. Is it mimetic to have tokens that have a set price versus supply curve and that allow people to do effectively kind of fantasy sports punting or interact with the game? I don't know. Is this utility, or is it any more utility than the meme coin itself? Right? It generates human interest and an inflow of capital into a new product. And for me, at least, that's sufficient for us to talk about value creation. But I think the real question is how much value capture occurs around that, right? Clearly, the extremes would be Bitcoin. A lot of value is being captured with Bitcoin up at 100K, right? Meaning long-term holders are selling out and rotating in other things, or they're taking the win and going and sticking it into the ETF. Simple, exchange for physical or exchange for swap transaction. But long-term coin holders have sold up here and have captured that value. In meme coins, I think the thing that seems to irritate people is how much value gets captured from what is potentially created. And that seems to kind of get under people's skin. They go, well, the market cap went from 100 million to, 5 billion, but who's really selling, when these things have that geometric peak? And the question now, when people talk about the Trump coin and other such coins, is, what value capture is being done? We see the value creation, but it accrues to the benefit of whom or what within this ecosystem. But I think we'll get both. I think we will continue to get innovation in terms of decentralized applications, whether they be LSDs or whether they be decentralized marketplaces, or will it be, forms of on-chain money market activity? And we've seen a flurry of kind of M&A type stuff happen recently. And I think we'll also get what appears to be wildly speculative innovation in the form of, memes and other things, because there is capital that wants to give it a try in this environment, right? Different environments allow for different degrees of innovation, right? It's like, are we in the Protozoan, Paleolithic, or Triassic period? Are we in the Ice Age? We're not in the Ice Age, fortunately.
Yeah, fortunately. Yeah. Okay, so you brought up a million things right there, but talking about value creation, new products, etc. What are your thoughts on the new ETFs coming out? And I see. I think it was yesterday, a bunch of people put in for the Solana ETF. I'm obviously in the Solana ecosystem, so I'm most interested in this. Yes. I know some people that are in Washington, kind of like trying to spearhead this initiative. What are your thoughts on this? Do we get a bunch of new ETFs from multiple coins, or does it just kind of stick to the big ones? What does that do for those tokens or coins or ecosystems, etc.?
Yeah, so ETFs as access product for coins as a general, I think been good in terms of liquidity and broadening audience participation, and again allowing these tools to be used in diversified portfolios. Who am I to say whether Litecoin should be turned into an ETF? I mean, Charlie Lee cashed out many years ago, bought himself a Richard Mille and a yacht, and sailed off into the sunset, and God bless him. But here's Litecoin now, right? I mean, Litecoin was like a bull market token from 2017. We're back now, not even having reached those levels, and Litecoin's finally going to have its day, I think, and get an ETF. I think we will get a proliferation, and there are different varieties of ETFs and ETPs, right? ETFs, of course, like we're going from grayscale trusts and now to Litecoin, cash ETFs, but we're also getting a proliferation of ETPs, right? We've seen the new Calamos product, which is buffered. And again, this is not a solicitation to buy or sell any of the aforementioned or to be mentioned things. It's just financially interesting that you have a non-traditional player like Calamos creating ETPs that use derivatives in order to provide a certain kind of payoff profile. And we've seen BlackRock and others do that. And it's different from a levered payoff profile on the underlying asset. It's not 3x Bitcoin levered long or short. hey, you get 80% principal protection and you get 150% upside participation. And do people want this? It remains to be seen. What distortionary effects does that have on the derivatives market? Do people want buffered Bitcoin, or they just want IBIT? We're in that experimental phase, particularly because regulators, at least under this presidential administration, appear ready to accept that. And I think we will get that. Are we going to get the buffered Solana ETF from Calamos this year? I don't know. Or will it be, as you say, Jito staked or LSD staked, Sol buffered, wrapped?
That would be great.
Listen, if you can dream it, you can build it, right? And I myself am spending time talking to people, exchanges, and over the counter, derivatives liquidity providers about, what would you take as collateral, right? Can I build a strategy around this? If I can build a strategy around it, an ETF could be made for it. And a lot of that has to do with the plumbing and pipes. And I think most importantly, the interoperability of capital. I know we've talked about this before, but just how similar are dollars and Solana to be able to create financial flows and collateralization, right? Are people going to accept that Solana could be posted as collateral for a trade, or could be held by a custodian in order to allow you to issue a dollar-priced share class of ETFs? That discussion is underway, but I think this kind of flora and fauna proliferation, like bacteria under a microscope in a petri dish, is not going to stop now until there's some sort of exogenous force that does it. And certainly regulatorily, this administration does not appear to be the one that's going to be that exogenous force.
You mentioned that in a text message, something about, and I'm spacing on it, but you were talking about how Jito Sol could be used as collateral, or people are starting to look at Jito Sol as collateral.
That's right. Jito Sol, M Sol, these other, kind of LSD Sol equivalents. Yes.
Okay. Who was asking about that? If you can say.
Yeah. So
what
so
did
these
that
are
look like?
Yeah, these are institutional allocators, right? And people who, are native to that ecosystem, right? They have liquid Sol, they have locked Sol, they do various different things with their Sol, and some of it, of course, uses these LSDs. And so the natural question now for people is, I like the asset, I start to feel good about holding it, and I want to start to run incremental return strategies on top of it. And how do we actually structure that? How do you get a custodian to work with this asset? And it's interesting that in the Bitcoin space, we're starting to see those kinds of offerings, right? Where there are staked Bitcoin, which to me is a little bit of a non sequitur, other than, it's just not what was part of the canonical understanding of what you use Bitcoin for. But that being said, staked Bitcoin is a reality. There are a number of providers that do it, Babylon, CoreDAO and others. And there are custodians that are working with staked Bitcoin. And to the extent that they are, that allows you to start asking questions. Well, hey, if you're going to, XYZ stake Bitcoin, and you can have the staking token itself, right? The Jito equivalent for the Bitcoin ecosystem, and you can trade derivatives against those. Mm-hmm. Well, then almost everything is possible. And how much bigger of a leap is it for people to go, well, okay, I'll have a custodial account with custodian XYZ. I'll have a segregated account where I hold my Sol and I stake it directly with the custodian through their staking services provider, or maybe they have a validator themselves. But then, I like more pickup, and I'll go to a Jito or an MSOL or whatever it is, and I'll do that. Well, if you'll take, XYZ stake Bitcoin and those tokens, why wouldn't you do it for Solana, right? And how much more of a nuanced discussion is it, especially when you go, okay, and what I want to do with it, right? It's, I want to custody it here. I want to have it staked while it's at the custodian, and I want to be able to have it subject to a pledge agreement that allows us to trade options against it. And that is starting to happen. That is starting to happen, I think, mostly with liquidity providers that are outside of North America, right? Because if you're a swap dealer and you make markets and options and you adhere to the rules of the CFTC, this gets into a little of, I don't know how we would treat an LSD staked asset, but it's starting to come up, and I think people will find creative ways to do that. And again, that's just going to be further impetus for proliferation of asset management strategies, where people go, it's no longer, I must have the asset. It can't even be staked. If I want to trade options against it, or I want to lend, borrow, or I want to, do something further with it, like, be an NLP into some kind of automated market making protocol. Now it's becoming, well, maybe you have a bit of some of those, and maybe there are some collateral buffers, right? Where you can't have, let's say, you couldn't stake all of your Sol on Jito and lock all of that into a pledge agreement and go trade the full amount against a derivative position like a collar or, you know, a call overwrite. But maybe you can do that with 50% or 70% of the position. And this starts to get interesting. And what is that going to do for volatility dynamics? What is that going to do by way of bringing down overall risk neutral yields or static returns that you get from holding these assets? And I think as capital becomes more fungible, whether it be between, you know, LSD stake versions of the asset and liquid versions of the asset, or the ETFs or the real asset itself, or, you know, futures on the asset and the asset itself, or regulated and unregulated, all of that is going to start to come together as a sort of the same thing. And to the extent that it does, you know, probably returns for running, you know, farming type strategies or static return strategies or staking type strategies should come down. But it probably means there'll be way more capital coming to work to run these types of concoctions. And again, that's probably only good for the deepening of asset class liquidity and the broadening of awareness, right? These are no longer fringe conversations, you know, with super erudite crypto geeks. These are, hey, assets are stakeable. That's a thing. It generates a return. What do you do with it? You know, how does this compare to TradFi priors? And I think that will also continue to drive some of the adoption, right? Is familiarity with things people have seen before. And as we live at 100K Bitcoin and 200 plus Sol, you know, people are, you know, TradFi type people are walking into the room. You know, these are career fixed income managers or, you know, blended portfolio managers at shops in Boston and New York and Newport Beach. And they're going, okay, well, I'll figure this out, right? And I'll create a strategy around it. I'll create a payoff profile around it. And I think that is what the Calamos ETP is all about. I think that's what people buying MicroStrategy converts and sticking them in insurance portfolios is about, right? It's pushing the curve of allocation decisions based on understanding, right? And, you know, if you know, kind of 2024 was a year of institutionalization, hopefully 2025 will be like the year of enlightenment, right? We all spent a great year educating newer entrants to this global crypto ecosystem, so that at the end of the year they get all of it, and then we get all that great product that we hope will come forward, you know, and bring additional allocations, you know, price support, stability, and innovation to all the things that we want. That we get, we're creating value. Now we have enlightenment, and after enlightenment, we get capture of value. That's this is the end game.
Exactly. It's yeah. That, I mean, I hope what you're saying all comes true.
Well, listen, these are prognoses about what could be, right? What could be if regulatory environment remains friendly, liquidity remains, you know, ample. And there are, you know, questions about that, you know, when you have a 600 billion market cap drawdown in, you know, a Mag 7 stock like NVIDIA, what does that do to liquidity? Well, the Fed is meeting today. People are going, will they cut or will they stand pat? I would argue that's not as important in terms of the immediacy as how much liquidity is available from, you know, from NVIDIA, right? Is it plus or minus 600 billion? I mean, yes, of course, an interest rate change, but the Fed nominally affects more than 600 billion of capital, but it's not as immediate and in your face. And that really is, I think, a risk factor for sure that has to be accounted for when we talk about, could all this good stuff happen? Yeah, right. As long as, you know, Mag 7 doesn't fall out of bed. If it does, then we have to work through, you know, how disconnected are we from that? And how disconnected you're from that depends on what you're doing, right? Are you trying to build DApps and do, you know, decentralized AI compute on chain? Or are you just a dinosaur proof of work, you know, store value and peer-to-peer payment system, right? Or, you know, and those are right.
That's right. And so what you're saying is liquidity is important.
It is, especially for our asset class.
Yes.
You know, because we have periods of time where new money comes in, and it certainly seems that post-election, and I would argue for much of 2024, it was new money, you know, coming into this system. But then there comes a point where capital kind of gets sticky, stays around, and rotates. You know, if you want to see a case in point of that, look at Inauguration Day weekend, right? You can't wire in new money to crypto between Friday and you know, and then Monday was inauguration. So we really had a long weekend, and you were seeing those money is staying within the system, but it's just ping-ponging around, right? We saw Sol rip, Ether go quite a bit down, Bitcoin sort of stay there, Sol sell off, Ether bounce back, Bitcoin kind of stay there, Sol down, Bitcoin way up, right? And so And that's showing you how this, kind of newly created Frankensteinian monster is trying to articulate its limbs. And then Tuesday happened. And for the most part, right, then yes, that new liquidity started to enter the system, and we started to balance out at, whatever, 250 Sol, 105 BTC, 3,300 ETH. And then there was the exogenous shock from liquidity, right? And so those, when you think about what's going to affect the prognosis, and do we get all this good stuff? Do we get these awesome products? Do we get greater fungibility and interoperability of capital like we're talking about? We need the liquidity there to support it, undoubtedly.
That's right. That's right. So here, let me just sum all this up. You are saying that Jito Sol is important because it brings, or it frees up liquidity to our system, right? Is that what you're saying?
I think in a way, right? When you talk about what these LSD tokens are, and again, in a sign of, the L1 wars, people are now, no one's asking me about, well, could I take Steth and run derivative trades on it, right?
Yeah. I'm just messing. I was just joking.
But it is a good point, right? Because these things are financial lubricants, right? In the same way that some of innovations like USDE and Athena Coin itself and Ondo and sort of Ondo money, it matters what the proxy tokens themselves are, as well as the utility token is doing. And I think in all seriousness, some of these things we kind of go, who really cares about my liquid staked Sol or Ether token? But the answer is, at these market caps, people care a lot because it contributes materially, right? When Sol's like only 10 or 20 billion dollars, you go, okay, like Jito Sol, I would have said to you, Jito Sol is important. I would have said, Justin, come on, just like go take a hike, man. Let's go talk coffee. Let's go talk Falcons, whatever. But at 100+ billion, it does matter, right? It's an order of magnitude thing. And that's one of the other big factors for this year. I mean, the stakes are up, pun intended and no pun intended.
Yeah.
And the market caps are really quite big for everything, for all asset class, for Mag 7, for the market in general.
That's right. And hopefully it continues. But I've lived through I've survived in crypto for a long time. I've seen, the walls of Jericho come tumbling down many times.
We can't have nice things forever.
We can't have nice things. It's just God did not intend us to have nice things.
He's not a fan. We have to break them down periodically. The walls will come tumbling down, and then they will be rebuilt. I don't know whether it's 3D printed walls or whether they'll be poured in place concrete or like prefab.
Prefab
carbon fiber walls, or maybe there'll be metaverse walls. Metaverse hasn't really come back yet, so let's leave that.
That one might be dead, but for a while anyway. But okay, so let me ask you one more question. I mean, we've been ripping for a while now, but you've been talking about some pretty sophisticated things. This podcast is called Midcurve, so let's break it down a little bit. And let's just say that you are just a regular person in this space, and let's stick to the Solana ecosystem because that's what we're in. Obviously, I know you're in Bitcoin and all the others, but let's just stick with Solana. If you were to run a strategy, again, not financial advice, but what would you be looking at right now? Are you lending? Are you borrowing? Are you still somehow trading options somewhere, if that was even possible, if you're outside of the States? What are you doing?
Well, I think I would qualify. I focus on institutional allocators, so retail is a bit of a different bucket, but assume that you're at a place where you can begin to consider institutional solutions. Lending to me is a bit of last cycle crypto, and was probably one of the contributors to we can't have nice things because we don't know what to do with that sort of Promethean fire. Lending is more like naphtha, right? I mean, it's or napalm. I mean, it's highly explosive. It's not just caustic; it's combustible. And nice things weren't necessarily done with the lending facilities last cycle. This time around, lending is interesting, but not for the reasons that you would think, right? Lending is interesting because it's a means to an end. It's not, I need a lend borrow facility so I can get some extra juice on my coin. I might want a lending facility because, for instance, suppose that a CME Sol contract comes to fruition, which it seems like it may. There have been announcements that there will be a Solana listed future on the CME. This is great. It helps in any number of ways. But imagine I want to run a simple strategy, right? Which is I want to hold my sol, I want to stake my sol, and I want to, if whenever the funding gets positive, which it's not now, it's negative, but it has been positive in the past. I want to I want to run a cash and carry basis strategy. What does that mean? You hold the asset, you sell the future against it. And if there is a contango curve, meaning an upward sloping futures curve, then that difference between the futures price and the price today is additional return that you get on top of whatever the staking rewards are. Cool strategy, right? Certainly makes sense. Has been a great one for Ether holders, for the Athena protocol, for others running these types of strategies. The only problem with that is if you're in the US, you can't trade on these offshore exchanges. CME sounds wonderful, but you need dollars to get onto the CME. And how do you get dollars out of a crypto asset? Lending, right? You need to go to someone that basically offers you what amounts to a prime service. And so I think that when people go, institutional money managers start asking about borrow and lend, they would go quite naturally, well, could I use borrow and lending in order to get access to another asset, dollars, that I can post as collateral against a futures contract that directionally hedges my sol? That's smart portfolio management, provided that you have access to those kind of facilities. It's not borrowing dollars against my sol to borrow, to buy more sol, to stake it, to get, LSD tokens and restake those and juice this up, to some kind of, infinite and perhaps unsustainable return. So I see these kinds of things. They're all tools that you have. And that is to say, you've got options, and options can be used, again, if you're an institutional allocator, both for principal protection as well as incremental static return, right? Over the presidential weekend, we saw shorter dated Solana vols hit 150%. What does that mean to someone? Well, let's just talk about it in things that you can, actually relate to. That means that 25% out of the money options that were roughly 4 to 6 weeks from expiry were at, 5, or in some cases, depending on where you were and how wide the market was, 10% of the asset price. That means that's a lot of excess return, potentially, if you're willing to grant the right to someone to buy your Solana at a higher price. So you've got options. You've got the borrow and lend, and I think it's sensible and responsible to think of them as a complement to a managed solution where it allows you to redeploy assets and get a different kind of collateral and go put on another type of strategic trade. I think then you've got staking, right? And you've got staking and now restaking, for things like Ether in particular, right? We'll see how soon all of that comes to fruition in other ecosystems. But at this point, I would say I'd leave the restaking to the experts there. I think it's still a bridge too far in terms of interoperability to get, to get the restaked assets into, a collateralized construct where you can use it. But you're going to help us do that.
We are. Restaking is here. It's coming. Yeah. I mean, it's here. You can restake your assets right now, but we are bringing restaking to Solana.
Right. And hopefully there will be some great builds. Again, I'm a graduate of Princeton University. A lot of the people within the eigenlayer periphery are related to Princeton. And I've spent some time, up there just jawboning with builders that are doing stuff on chain using restaking, and there are a number of these. And again, this is not a promotion of any of them, but there are chains now called Sentient and Ambient that are doing really exciting stuff in the DePIN space. Building DePIN plays in order to generate incremental rates of return for, restaking is another cool thing for investable capital. And hopefully that comes to pass in Solana, right? Where you essentially have a reason for people to bond an asset in order to provide some kind of cryptographic assurance about what's going on over there. Let's say it's, the sanctity of sensors, from satellites or whatever.
Can you give an example of that actually?
Yeah, for sure. So, and again, I'm talking about these in an academic construct, don't have any position in the tokens that may or would exist associated with these. But, there are these chains now, one is called Ambient, and what they do is they have sensors about, air quality and meteorological information that is floating around out there. And they're gathering that information and they're putting it on chain. And of course, ultimately, thanks to the auspices of what restaking will do. And restaking, as viewers know, is a way where you use what's called AVS, and AVS is like a double checking process to verify that validators are doing a certain type of work, and that work in this case is making sure that the information coming from these sensors is consecrated. That provides real value, right? Like let's kind of expand our minds. What's the worst thing that happened in 2025? A lot of good stuff that's happened. Worst thing I think that's happened for many people are these fires in California. It's a fucking tragedy, right? I mean, it is really sad. And from a financialization perspective, what's really sad is yet again, our insurance companies are failing us, right? People are going, I didn't have the policy I thought I had. My house got a little bit burnt to a crisp and I can't live there, but it didn't get burnt down. So I don't get to pay on all this stuff. And DePINs eventually, right, decentralized physical infrastructure networks, and these types of chains where information is being gathered in real time by decentralized sources and computations are run on it, you may in the future be able to have insurance running on Solana, or insurance, decentralized contingent claims running on an Ethereum or Solana blockchain. That's cool. And much as insurance is for TradFi, right? Insurance is a place where people go and park capital to get juicy rates of return. Insurance is a kind of staking, right? And so no surprise, the big TradFi people walking into crypto nowadays are going, what looks like something I know? Wait, staking, restaking, insurance? And we connect these things, right? And so maybe this will be part of 2025's enlightenment and value capture by bringing these types of solutions on chain. And I would love to see that happen. And again, if you are an allocator and you are holding these assets and you go, well, I have an ability to take assets that are parked, and I'm using, let's say, to run a derivative strategy or a cross asset volatility strategy. If restaking them on some chain that's doing this, is incrementally possible, you have to start to ask that. Just the same as if you're a fixed income allocator in TradFi, you go, well, I could buy U.S. government bonds, I could buy credit product, or I could go do like cat bonds and abstruse insurance deals. And you have to know about all of those and think about all of those, because what do they do, right? I mean, we as managers, you think about how much risk is being taken with your capital and what your return is. And everybody should be asking that. Doesn't matter whether you've got, 100 SOL in your wallet or 1,000,000 SOL or whatever your token of choice is. You should always be asking. I mean, again, this is not financial advice. This is canonical in a textbook. You can go, you read it in virtually any academic program, that risk is correspondent, with reward, and then alpha is getting excess reward relative to your risk, right? Generally speaking, that's the way I think of it. And there are smarter forms of beta, but I think that's really the question that you want to be asking. And as we get into, greater productization, right? We have all these things now, staking, then restaking, and then, on-chain insurance or contingent claims and decentralized marketplaces for various kinds of things. You go, okay, so I could do a various number of things with my asset, lend, borrow, or borrow and then hedge, cash and carry, derivatives trade, stake, restake, LP, i.e. be a liquidity provider into some sort of decentralized exchange. What's my risk? And understanding that risk is really important. And I think that is the part that every allocator, whether it's personal money and principal capital or an institutional one, struggles with, because these are new types of markets, right? What is the risk associated with staking? How do we quantify that? What is the risk associated with restaking? What would be the risks associated with providing liquidity, to pools of contingent claims, based on, let's say, meteorological data or climate data or some other observable real world phenomenon. I'm hearing talk now of people building chains based on, Richter scale readouts, right? Would you like to LP your capital into, the Southern California quake insurance pool? That doesn't exist today, and that's not a recommendation to do it, but that might be the future. And if it is, that's more risk that you can sit and ponder. And previously, that was only an institutional allocator decision, right? There are insurance portfolio managers that think about stuff like that. That really hasn't been a retail decision. Could it be a retail decision in the future? If it does, that would be really fascinating.
Yep. This is all very fascinating stuff to me, obviously. I mean, we've talked about carbon credits or bringing carbon credits on chain. We've talked about bringing coffee on chain. It's like, there's so many things that you could tokenize in this world, in this life, that I think would be so much more efficient on chain than the traditional ways of doing things. And like, honestly, I think even though I pose as a cynic or a pessimist, I am still somewhat of an optimist in all this thing, in humanity and technology and all of this. So I would love to see all this happen. last thing, because we are coming up on time here. If someone wanted to do some of this stuff, all these strategies that you kind of just like breeze through over the last like 10 minutes, can you help them with that?
As an institutional allocator, yes. By way of a product proliferation, we shall see. I think, I am into product innovation myself and want to spend time thinking critically about this. And clearly having, vehicles or instruments that allow capital to be pooled and deployed into these kinds of strategies, be they derivative strategies or others, is an exciting, component of what will hopefully happen by way of financial innovation. I think the answer would be, can I personally? Stay tuned. Will the market? Undoubtedly. I think that, retail size participants should expect reasonably this year that in addition to buffered ETFs on Bitcoin, they will probably get yieldy type of ETF plays like Grayscale was recently announced on Ether with the JEPI product. And I think that they will probably also be offered increasingly complex financial payoff profiles. I think the best thing that I can say is read up a little bit on the math of risk. And risk is correspondent, to this thing we call variance, and variance, speaks to how much something is moving around over what time horizon and how certain are the cash flows associated with the payoff profile. And hopefully, as you guys, get ready to launch restaking, we can unpack some of the risks, financial risk in terms of, metricizing those things, for people to talk about and understand it. But, look, I would say, financial literacy in particular, as it relates to more and more complex products, which are now going to be given directly to, you, the individual trader, and not just, you collectively, the institutional allocators, which is principally who I work with. I think that's both a really good opportunity, but it's also a greater responsibility, right? The old thing, great power, great responsibility. There is more and more onus on individual allocators to really read the fine print and understand just what is the payoff profile. Many people have observed this. A lot of these, let's say, levered ETPs that exist today, they're not what you think they are if you just read the headline. You really have to understand how the underlying derivative decomposition of the payoff profile is created. They may use futures, and the futures positions have to be rolled, and those rolls have a negative carry, and you could hold that ETF and watch your NAV go to zero, even if the reference index stays the same. Stuff like that, right? And I think that's tremendously important. But I would certainly say stay tuned. Hopefully at some point in the first quarter, I'll have something exciting and relevant to discuss with you guys about a product of my own that pertains to some of the things that we've discussed today on previous mid-curves. But for now, let risk be your guide in terms of the return budget that you set for yourself. That is yes. Always a word to the wise.
Yes. So TLDR here is something interesting that's coming. Do your own research. And if you are an institutional type player in this game, you can reach out to Gordon, and Gordon might be able to help you if you're looking for somewhere to start.
That's right. Absolutely. That's right. Or, if you reach out to me and Justin, we might just talk about a lot of interesting random stuff, about rainfall levels in the Pacific Northwest and, snow running marathons up Mount Hood and, all this good stuff, kite surfing in the Persian Gulf. But we'll get to the asset management stuff eventually, because someone has to pay for all this.
Someone has to pay for all that stuff. Yeah. No, the one thing that we've talked about that I really still want to get into and just haven't found the time is Falconry.
Well, listen, not for nothing. I brought out, some fresh, freshly pressed linens with the Falcon on it. I've lined up my falconer for whom I'm going to apprentice. She's had some life events. You really? Yeah. She's had some life events. She's having a child, but there is a falconer that I have been promised that I can apprentice with. So I got myself an introductory falconry book. It just came shipped to me from Canada by a master falconer whose name is Al Tamimi. And we got to steep ourselves in this. We only have one life.
You only have one life. Exactly. You need to experience as much of it as possible. I totally agree. I need to do that. I need to find, because you have to apprentice with someone.
You do, and it has to be based in your state, because you have to file a license with your local fishing and gaming commission. So the way we do when we trade and build product, we do everything by the book. And we're going to do our falconry by the book, goddammit.
That's right.
And then we'll be out there hunting, quarry and game up there in Eastern Oregon before too long.
That's right. That's right. In fact, 2 things on that. One, I have 2 elk hunts coming up this year that I'm going to go on. So I will be sending you some meat if you want it, if you so desire.
I would love that. For my birthday, I always make it a point to get somewhere into the great American West if I can. I had elk carpaccio.
Oh man.
And it was just delicious and buttery. So send me the elk. You can send it COD.
Yep. Yeah, that's right. Yeah, I mean, it is, elk meat is so good. Not to get off on this tangent, but it is incredible. We actually had elk meat, like elk steak burritos the other night, and they were incredible.
Firing me up. What am I doing out here on this dreary East Coast with no access to to fresh game?
That's right.
It is a tragedy.
It's a tragedy over there. Just I was in New York last weekend, and
ask for elk. None. I used to go to a place called Henry's End that had a once a year game dinner, and we would have that. And they had elk and rattlesnake. They had, some really great stuff like wild Canadian geese, bear. I don't really love bear. It's a little too tangy. It's got to be
bear is very greasy. Bear is greasy. It's tough to eat. I don't know. I'm not a big bear fan.
No, bear chili. That's about all you can do. Elk, you can do it in a gazillion different ways.
Yeah.
So save some elk for me.
I got you. I fired up a venison ragu the other night, which was incredible. Cooked in like full bottle of wine and just like slow cook. It was tasty. But yeah, anyway, we can talk about all this stuff later. Other thing is I'm going to the UAE later this year, so I'm going to get into some Falcons.
we may cross paths. I think I've got some APAC travel coming up in February. I've definitely got some Middle East travel coming up around the time of Persian New Year. So
let's connect offline.
We'll do a Midcurve from the UAE.
Live.
Right.
Live.
Maybe we'll even do it like out in the desert. The last time I was there, I took my kid camel riding and we went dune bashing in these Land Cruisers. Oh, it was nuts, man. I got a guy. Oh, and by the way, he also told me he can get me top quality Falcons, but I'm not sure if that's by the book.
I don't know if that one's by the book, but by the way, the I got a guy thing is such a New York. That was so New York of you right there. I got a guy. Okay. Right. All right. Let's end this way here.
All right.